Thank you, Paul. As he said, this one's going to be a little bit different to the others. We're an oil and gas company. That's a picture of our offshore production facility. We produce oil from there, send it onshore. The standard disclaimer, I never read them. I encourage you to, at your leisure, or not, as it happens. So we're producing oil from the Perth Basin. We have the Cliffhead offshore oil field. We produce about 630 barrels of oil a day, goes onshore, we truck it up to Geraldton, goes away. A quick cap of what we are. We have a market cap of $24 million. We have $12 million cash. We have a 10% holding in State Gas. That's worth about $6 million. State Gas is a Queensland-based ASX-listed coal seam methane company. And we have those two onshore blocks, L7 and EP437. We've just farmed out a 50% interest in those for $20 million. That values our remaining 50% at $20 million. So if you add up 12 million cash, 6 million shares, and 20 million on the ground, plus a bit of production, that comes up to more than $24 million market cap. There's a reason for that. I'll explain it later on. So a recap of our production. We've got an offshore platform. It's not normally manned. We fly people out on a daily basis when someone needs to be there. It produces through a pipeline to our onshore facility. We store 30,000 barrels of oil in those 3 tanks at the end there. When they're full, we run a trucking operation up to the port of Geraldton, 90 k's north. You can see the truck next to the tanker there. We run doubles, 24 hours a day, 4 days running. The tanker is half full. It sits offshore. We refill the tanks, bring the tanker back in, repeat the operation. The tanker heads off up to Asia to sell the oil to a refinery. We've sold 3 cargoes to Thailand, 1 cargo to Malaysia so far. So a summary. We have the existing assets. That's the oil field. Cash flow steady, producing 630 barrels a day. That will increase. We've got 1 well we're going to bring back on stream. It'll probably take it up to about 750 barrels a day. We've got the export route going. We're selling tanker loads of oil for about $5 to $6 million each. And we're selling about 50,000 barrels a time. When that field comes to the end of its life, we're going to convert it to a carbon capture and sequestration project. So that has been applied for. We expect to get the first approval from the government late this year. It's going to result in us having a lower interest in the carbon capture project than the 78% interest we have in oil production. And we expect it to come in to take carbon and start injecting it into the ground in 2027, probably. Our future focus is those onshore blocks, L7 and EP437. We farmed out 25% to Talon Energy, farmed out 25% to New Zealand Oil and Gas. We've shot 3D, the interpretation is underway, nearly finished. We're going to drill those in 2024, probably Q2 in 24. New ventures, we know we have to bring in more assets to the company. We've applied for a lot of acreage in the UK round, and we're looking at Australian and Asian new ventures. I'll swiftly talk about the carbon capture project. If you want more information, come and talk to me on the booth. It's a fairly simple concept. All those gas fields in the North Perth Basin contain some carbon dioxide. There's no legislation for them to inject it into the ground in West Australia. You have to strip the carbon out and do something with it. Our little field sits in federal waters. We can take carbon dioxide, reverse the flow, and put it into the ground. It'll stay there for geologic time. It's going to cost us about $110 million to convert that, and the NPV is probably about $150 million. We can put 10 million tons of carbon dioxide into that field. It's a good thing to do, it's economic, and it's great use for an existing asset. Now the exciting part. We have farmed out, as I said, 50% of interest in blocks L7 and EP437. These blocks are next to the really exciting discoveries, Waitsia, 1 trillion cubic feet of gas. West Erregulla, 500 billion cubic feet of gas. Lockyer Deep, we don't know now actually, used to be 1 trillion cubic feet of gas. So these two companies are going to pay $20 million for our upcoming drilling program in 2024. We'll have to tip about $2.5 million into the bucket for our contribution, but we're essentially carried. We've got 10 gas prospects and leads in this block, and you can see the resource ranges there. The biggest structure is over on the eastern side. It's called Booth. It has a best estimate, most likely case, and these are prospective resources, so they haven't been drilled yet, of 279 BCF. The potential value for that is $2 million per BCF. I'm not allowed to tell you what that equals, but I reckon most of you can multiply those two numbers together, and we're all legal. These are really exciting, and that's a real company changer to do that. Next to that, in our EP437, we have a shallow prospect. It's an oil prospect. We'll drill that first half of 24. Our best estimate is 5 million barrels of oil. 5 million barrels of oil is worth a lot of money to us, and it's really quick, cheap, and easy to bring on stream and start marketing. So I wouldn't be surprised if that was the one that got drilled first. I'll go through a little bit of activity in the Perth Basin. We've had some corporate activity lately. Mineral Resources bought Norwest Energy. Norwest Energy had a 20% holding in one gas field. They were bought by Mineral Resources, Chris Ellison, for $450 million. Warrego had a 50% holding in West Erregulla. And they were bought by Hancock Prospecting, so Gina Reinhardt, for $440 million. So there's some serious money changing hands here. This gas, if we find gas, it's worth a lot of money. It's a company changer. As I said, all the recent deals and our own economics point to a value of gas, $2 million per BCF gas in the ground. If we discover gas at Booth, we could add significant value to Triangle. I mean, adding a zero to our market cap. And this comes as a Perth Basin. The Perth power market is in disarray. We all hear on the news that the East Coast power market is a problem. What you don't hear is the West Coast power market is a problem. We're importing coal from New South Wales to put into a coal-fired power station. Last summer, we burnt diesel to keep the air cons running. That's really expensive. That's outrageous. So we've got the last bit of unexplored acreage in the Perth Basin, and we're going to drill it first half of 24. I'll be the first person to say you cannot build a good basis for an oil company with 3 permits. So we're looking at new ventures. You may be able to tell from my accent that I've got friends, contacts in the UK. The UK had their foot on the hose pipe for oil and gas exploration for about the last 10 years. They've belatedly realized that cheap Russian gas doesn't last forever, and they need to do something about it. The UK has put a whole load of really attractive permits into a license round. We've bid with 3 groups for 4 bunches of acreage, and most of these aren't exploration. These are development. They've got gas in the ground, proven gas, and it needs some engineering work, some modern review, desk studies, and eventually, in about 4 years' time, a well to prove that these can come into production. We'll hear whether we've been successful, probably Q3, maybe Q4 this year. Further new ventures. I've spent a lot of time living in Asia, working in Asia. Asia is very attractive from an energy exploration viewpoint. The countries around Australia are desperate for energy. You look at Philippines, the Philippines has just started a LNG regasification project. Their gas price has just trebled in the Philippines. They have one producing field. It's going to end next year. It's a really attractive place to go. They're very welcoming. Indonesia has had some issues with the way they've handled oil and gas in the past. They're now importing oil, they're importing gas. According to The Economist, Indonesia is about to become the 5th largest economy in the world. They desperately need energy and they're changing their views. We've talked to both of these. So let's look at a summary of what we've done. The oil production's steady, our export route is proven, we're actually selling oil, we're getting US dollars for it. We've sold 3 cargoes, we've just unloaded the 4th cargo. There are further options to pick other people's oil up and add it, and that'll lower our cost per barrel. The Cliffhead 10 well, which is down, the downhole electric pump failed. We've pulled it out. We're going to get that back in, get that producing, and that's going to happen in the next month or so. The delay there has been that we found that one of the reservoirs hasn't actually been producing for about the last 8 years. So now we have to go and work it over and get production from that. We've got a plan for the asset when it comes to the end of its economic life. Economic life is probably 3 or 4 years for the Cliffhead oil field. Traditionally, you'd pull it out, you take all the steel away and sell it for scrap. It's a real waste. Why not use it and turn it around, turn the flow around and make it into a carbon capture project? It's economically viable, it's a good thing to do, and it means we don't have to abandon the facilities and take them out. It extends field life by, well, 5 to 10 years, maybe 15 years. Then we've got the upcoming exploration in the North Perth Basin. Talon Energy, New Zealand Oil and Gas are carrying us through the best part of a 3-well drilling program. That's an $18 million drilling program. They're really big, valuable gas targets and a really nice oil target. That's going to be drilled Q2 2024. And in new ventures, we're looking to bring more into the hopper. We know we have to do that. We're looking around Australasia and further afield. So let's look at the share price catalysts. We've proven we can come up with an oil export route. The new management has been in Triangle for 16 months. We've been really busy, we've been moving. We've got a new oil export route. We've sold 3 cargoes. We're about to get paid in mid-June for the next cargo. We have a holding in State Gas. We reduced that holding when their price spiked up, when the St. Baker family moved into State Gas, and we took $6.7 million off the table. Very useful for us. We've completed the farm out of those 2 blocks. That puts a line in the sand. Those blocks have a minimum value of $20 million. We've applied for a CCS project. We've applied in November. We expect to get the first approval probably this November. We've applied in the UK round. We're going to work over the Cliffhead 10 well. We've issued resources on our interpretation. Well, we've done all of that. What's coming up is the workover. That'll be done in 4 weeks. The CCS project approvals, the results of the UK round, new ventures, and then drilling. Thank you very much for your time. If you have any questions, come and see me afterwards.